Hi, I'm Phil Grandy at philsgang.com. I'm going to show you how easy it is to follow a stock and make money with a stock with today's technology of my PT2 chart. The PT2 chart right here lets you know when money's going in and when money's going out. When it turned from red to green, on the second day we purchased. That gave us approximately about a 20% gain, 25% gain. When it turned red, we turn around and we sell short, which is about the same, gave us about the same amount, 20% gain. So 20% up, 20% down. The beautiful thing about this, it has nothing to do with fundamentals of the company. This is AU, it's gold, Anglo Gold. I don't know anything about the company. I don't know about the fundamentals, and I don't want to know about the fundamentals because fundamentals do not move a stock higher, not like it did years ago. Nobody buys stocks based on fundamentals. They tell you they do, but that's not what they're doing. They all follow the big money. Now, did you notice that the economy is getting worse? So while the economy is the reason why the economy is getting worse because of the policies that we put in place for not creating jobs. And here's how it works. If you remember, after the crash, Bernanke came out and said, we're going to do 0% interest. We need 0% interest because if we have zero interest, everything is lower, cost of borrowing is lower, then the consumer will go out and start buying, and we're going to grow the economy and we'll grow jobs. That was a total lie. 0% interest rates didn't matter because in 2009, we still had 10 million people upside down in their homes. We lost $12 trillion in housing net worth. People didn't have money. You give them money for free, it wasn't going to work. And that's what happened. But they knew that. Bernanke knew that. Bernanke knew, and the Federal Reserve, and who's the Federal Reserve? The Federal Reserve is owned by 400 individuals, very, very wealthy individuals. This is a private company. It's a banking syndicate. And of course, Bernanke at the time was the CEO for the banking syndicate of this private company. They call it Federal Reserve. There's no more federal than Federal Express. So why did they lie and say we're going to create zero interest rates to help the economy grow? Because all zero interest rates does is help the rich get richer and quantitative easing. And that's what grew the stock market. So the beautiful thing is, as the economy gets worse, the stock market gets better. Why? Because they say the same lie over and over, that they're going to go ahead and they're going to drop interest rates to zero. Okay? And then she starts saying the same thing when she took over. Every time you say we're going to drop interest rates to zero, we're going to grow jobs, and it's going to help the economy, none of it's true. What happens is the 400 members, they now can borrow money at zero, and they are able, to go in and buy stocks, because when you have zero interest rates, and they can also, the Federal Reserve, loan money to the banks to speculate over here. So here's the banks, and they loan banks, the Federal Reserve loan money to the banks, and then the banks come in and they buy stocks. And the Federal Reserve also prints money so they can buy 10-year treasuries, so to drop the interest rate from, say, 2.3 down to 1.1%. And that way, countries like China and the Saudis, they will not buy bonds, they will not buy our debt, but instead forces them into the stock market. This is all part of zero financing. So that's, again, moves the market up. So it's a lie that's going to create jobs. It hurts jobs. 0% financing hurts jobs. Here's how you know that. If you have 0% financing, it takes it away from savers, okay? So the savers cannot save. If you don't have savings, then you don't have, the banks don't loan money to small businesses. From savings, we get investment capital to small businesses, okay? It's that investment capital they need to buy equipment, hire people, and they create 78% of all the high-paying jobs. So the idea is to make sure we cut them off. The Fed, with these two nuts, these Fed with the 400 people, the 1 percentile, they make a fortune in the stock market with low rates. Low rates shoot the market up for various reasons. I gave you the one reason is that the banks can come in and do deals and buy stuff, but also they also go in and buy their own bonds. The Federal Reserve buys the bonds to drop the yields down so China and the rest of these countries go into the stock market. But there's another reason they like zero rates, because they can give it to the companies. Now, here's what's going on. When the economy is going down and we don't have good jobs, mostly part-time, low-wage paying jobs, okay, people don't have extra money. In fact, with all 0% financing going on, what happens is the cost of living goes higher on the stuff that you need every day, goes higher. Zero rates causes inflation, causes all the necessities to go up in price. What's happened to the people, the middle class people, their income has dropped by $4,500, but their costs have gone up $10,000, so they're in the hole. So people are not going to the mall. Remember, the lie was we're going to put interest rates at zero to people who have jobs, make a lot of money, they'll go buying, they go to the mall, buy stuff, the economy's doing good. But no, nobody is driving over to the mall, okay, or to the store over here. Nobody's driving over there because they don't have the money. So what happens when earnings come? Well, they're going to show their stock is going to drop from $20, their stock will probably drop down to $15. Well, they don't want that to happen. So what do? Well, they play a game, an accounting trick. They go and borrow money, okay, at 0% from the Fed. These 400 guys, they give them the money. Now they got the money, they buy their own shares. When they buy their own shares back, if they have 1 million shares, let's say they buy back half of them, they only got 500,000 shares. With 500,000 shares, they spread the earnings that they do have over lesser shares, which makes their earnings go up artificially because you're spreading your profits or earnings over fewer shares. It moves the earnings up, which moves up your stock price. So this $15 never happens. Instead, it goes up to $35, creating a bubble. That's what 0% interest rates does. It creates a bubble in the stock market. Now, the Federal Reserve, they're delighted. They'd hate to see any policies come in where it's going to change 0% policies, where money will go to the banks, savings, and then the savings will go to the small businesses. Small businesses then will start making money. They'll start hiring people. That's the last thing that these guys want, the Federal Reserve, for small businesses to do well. They do not want savings. They don't want people to make money and put it into savings so that investment capital goes to the small businesses and it creates all these beautiful jobs so that people have enough money, because high-paying jobs, to go over here to the mall and spend. So that's what they've done. They've been able to keep the market going down. So every time you hear how the interest rates are going up, when you hear interest is going up, that is a bold-faced lie. Okay? She says that because if she says things are good, interest rates are going up, that's synonymous with a good economy. Now, we don't have a good economy. Well, people don't know that. As long as she says we're going to raise rates, they assume we got a good economy. So you got people that come over from Europe, and what they do, the Europeans, they dump their euros. They dump euros, and they buy dollars. And what do they do with those dollars? They buy stock. So stocks keep going up. So everything that's happening right now is geared on zero financing. Make sure the economy is bad so they can justify saying, hey, we're going to lower rates to zero so that people will start buying stuff, financing stuff, which is not true. So they're not about to to raise rates. First of all, if they raise rates, the stock price that we have right now, the PE you have on a stock price, let's say 21 on the S&P, they can't justify that, raise a rate and justify it. They'll kill that. So many things happen when they raise rates. The other thing, they don't want to raise rates because they don't want to have to pay money for money they borrow, the Treasury. So, yes, maybe they raise it one time, that'll be it forever. Their whole deal is to keep the economy going down. How do you keep the economy going down? Making sure small businesses do not get loans from the banks. So what did they do? They both made sure that they went in and they killed the community banks. Who sells money to the small business? Community banks. So what they did is they made sure the 400 guys told Bernanke and then told Yellen to make sure, give enough 0% money to the big bankers to go and buy all the community banks, because we want to make sure we're going to shut off small businesses, because the community banks loan to small businesses, and then small businesses hire people, pay them good, right? And it grows the economy. Well, what would happen? The stock market would come down, because anytime that you raise rates, right? The stock market comes down, and you raise rates in a good stock market, a good economy. So instead, the market would go down. So they're preventing everything they can from the market to go down. They don't want this market going down. What would make it go down? If they turned around and if they said, all right, we're going to start raising rates. Raising rates is bad for the stock market. So there's where you stand. So what's going to happen? The herd now is going to follow through, continue the work for the 400 people. She's their CEO. They're going to continue to make sure the economy goes down by making sure that these small businesses do not have money from savings. And who's going to save if you give somebody 0.1% at a bank? So as long as there's not savings, there's not going to be investment capital going to small businesses, which create the jobs. So they're going to make sure they keep strangling the small businesses by making sure there's no way they can get loans. And they even had the big banks loan money to the big banks to buy all the small community banks who loan small businesses. So next time you hear how they're going to raise rates, bunch of nonsense, okay? They know they can't raise rates because who's in charge? These 400 people. The president's not in charge. Congress is not in charge, because these 400 people with their wealth, they own all the Congress. They own the president. They're all the big money bundlers. They make the decisions if the economy is going to, if they're going to raise rates or not. And why would they? You think they just want to be nice guys and say, okay, we made a fortune in the stock market over the last 7 years. We made enough now. Let's give everybody else a chance to make some money. Let's help Main Street rebuild itself. Let's get people to start saving. Let's get people to start saving again so they can loan money to small business so that you can get a good job at $21 an hour rather than a job at $12 an hour. Let's be good Samaritans. Do you think they're going to do that? Are you kidding? They're not going to do that. So let's take gold. So what's going to happen with gold? Well, as long as interest rates as long as the dollar keeps going up, then gold is going to keep going down. And the dollar is going to keep going up because why? Because she keeps on opening her mouth here and saying how the economy is good. And therefore, what happens is anytime the economy is good, you get the Europeans come over. They change their euros to what? To dollars. And when they change their euros to dollars, for what purpose? They go in and buy bonds, okay? They go in and buy bonds, or they go in and buy stocks, because you can't buy bonds or stocks without dollars. And then every time that dollar keeps going up, it gets worse and worse, because once that dollar keeps on rising, remember the Dow 30 companies do most of their business overseas. They make less and less money, and that means they lay off more and more people in the United States. So the more she lies and says the economy's going good, and the proof is we're raising rates, the more people from Europe drop the euros, buy the dollar, and they continue to buy stocks and they buy bonds. But the problem is the economy will keep going down even further. Why? Because the earnings, a lot of our corporations, 70% of their earnings from overseas, and they can't compete with companies that have the euro. So it's going to get worse. So this is their game, to keep the economy as bad as possible. And you simply do that by making sure small businesses don't have access to capital, okay, investment capital, so they can hire good people. So the idea is to take this group here, the small business, and strangle them. Because the more we get rid of small businesses that creates all the jobs, the higher the stock market goes, because we can keep everything at zero. That's why we come back to here. You want to join the gang, because now this whole economy, the whole stock market, has nothing to do with fundamentals. It has to do with following the money. That's it. Follow the money. And that's what we do every day. That's what this chart does. Turns green, you buy. Turns red, you sell short. Join the gang. It's a lot of fun, and especially this PT2. It's so easy, so good for the people who are so busy. They don't have to do anything. All day we update you. We're in your corner. Or if you want, you can be more active, and we can use the PT1, and where we just follow the same 5 stocks every day. Okay, the same 5 stocks every day. And that's if you want to be more active. Regardless, it's a lot of fun. It's only $49.95 a month, and we always do well. See you on the charts.